This is a conversation with Josh Bobrowski. He's accomplished in business, investing, and social media. He's run and successfully exited a company, raised millions of dollars of funding for another, gone viral on LinkedIn, and collected millions of views on YouTube along the way. We touch on some of these topics and more. I wanted to speak particularly to some of the challenges of external circumstance, as, due to the pandemic, many people have had challenges in that area and we have to find ways to navigate them. And he's done extremely well shifting from a pre-pandemic business operator to an investor and content creator. The changes of culture and environment are going to continue to increase in frequency due to the effective acceleration that technological innovation tends to have on society. And I'm very interested in being able to adapt to those things as they come. This podcast is sponsored by me. Go to newsletter.joshterryplays.com to get access to more of my writing and to stay updated on the podcast.
Thanks for coming on, man.
Thanks for having me.
Let's start with the first business.
The first business I had was a landscaping company. I started when I was about 17 years old, and it would be like the lowest starting point of what you would consider to be an actual business, right? So I initially started out just doing yard work for a neighbor, and then I realized that that neighbor could fire me if I didn't do a great job, and then I would have no income. So I wanted to get multiple people to hire me, so I started kind of doing work for maybe 2 or 3 neighbors. And then I realized that initially I was making, I think it was $10 an hour. So this was probably in 1997, maybe 1999, something around that time period. I'd have to get my dates right. But so that was pretty decent money to be making for a kid. And so I was able to convince the people to pay me $12 an hour initially. And then I hired some friends for $8 an hour, which was still pretty good. And that was how it started. After a few years, I got into it and I started doing pretty well with it. Had a full crew of people, had a dump truck, and that was my first company. I used that so during the summertime between undergrad and law school, I would be doing landscaping, and then during the school year, I'd be helping pay tuition, playing a little bit of poker along the way.
A lot of people mow lawns, but the vast majority of them don't start a business out of it. The vast majority of them don't build past the initial lawn mowing. I'm a big fan of extrapolation. To me, that seems to be the thing that makes it possible for people to come to the conclusion that they could do something more. But what made you want to grow it beyond? I mean, initially it was unfireable, right? What made you keep going?
So there's actually an even better story behind it that I could get into that makes even more sense. Is I spent about 2 months working as a busboy at Outback Steakhouse, and I don't know, I might have made $200 in a week. And I remember there was one job that I did where I hired 2 or 3 friends for it, and this was kind of the tipping point of going from beyond me working at an hourly rate. And I think in 2 days I made about $200 cash after paying my friends, and that was the last day I went to work at Outback Steakhouse. And just the contrast of being a busboy and doing something I don't enjoy with being outside in the sun with my best friends and working. I think that was just a really big moment for me of realizing I can enjoy what I do, I can work with people I like, and I can also make a lot more money. I was making probably in 2 days what I made in 2 weeks. Yeah, I think that's how the math broke down, that first real project that we did. And that was kind of a tipping point to set me off. But I will say both my parents are entrepreneurs. So my mom, she owns her own psychoanalytic practice, and my dad, he has passed away a while ago, but he actually had a mediation firm. And so both of them kind of had that entrepreneurial background. So maybe it didn't seem all that foreign to me to not go down a traditional career path.
What led you towards the gym?
Well, I graduated from law school, and a guy that I was friends with from high school, it was just wrapping up working in some finance fields, and he told me kind of about what was going on with CrossFit. It probably wasn't something I was really passionate about CrossFit, but I did think there was a huge growth in it. And it was right when I was graduating from law school. I knew I didn't want to be a lawyer. I wanted to start a business. And so that was actually a really great adventure where I kind of learned to be a full-time entrepreneur at that point. I think I probably had my most growth in that venture from where I started there to like where I finished was significantly better as an entrepreneur. I learned a lot about marketing. We created a YouTube channel that went viral. We created a Facebook page that went viral, Twitter that went viral. And I really I had a co-founder who was very good on the operational side, and he was running the day-to-day, and then I was running the business marketing aspects of things. And, it worked pretty well. And then he and I had different visions as far as where that was going to go, and we parted ways. And I think that it was like a really good 4-year period, exited that company, and then kind of moved forward.
You touched on something that I'm always curious about. People tend to talk a lot about like, what is it? It's should you strike up business with your passion, or do you do something that's a reasonable business endeavor? And it seems that people go both routes, right? And there's some folks that are very intensely saying you have to follow your passion and build a business around that. And then there's others that reverse engineer it, where they go, okay, well, here's a business idea that could work, and now I'm going to reverse engineer what I actually do around that. I'm curious, like where do you sit in that? Like, which camp do you prefer, or what are you drawn to? Because what you just described sounds like you're like, okay, this could work. Let's just do the things that work with this business. I'm not so interested in the fact that it's exercising, that it's gym. I'm interested in building a business, period. So it doesn't matter if it's a gym or not. I'm curious, like how much did the gym factor into it?
I think it wasn't that I was like against it, so it wasn't just like a reverse engineer. But I do think to be the most successful possible, you want to optimize what you're really passionate about, and like almost like a Venn diagram of 3 circles. You have what you're really passionate about, what you're good at, and then what is profitable and there's like a market for. And if you can get those 3 to overlap, that's where I think that you're going to have like the geometric success on it. And I think that is today where I really feel my mind is at, is that you want to be hitting all 3 of those things, because if you're only hitting any 2, you're not going to achieve as much as you could. And so that's my perspective on business as a generality, is you got to hit all 3 of those. And if you do, you'll be successful. And the definition of success is very different for individual. But to me, I think success is having a comfortable living, and whatever that number that is it $50,000 a year? Is it $5 million a year? Doing what you want, having autonomy with your time, and enjoying the work you do and finding fulfillment in that. And I think that like when you combine those 3, that's what's going to make you really happy in the long run.
I agree. It's like there's a lot of routes to get successful, but there are like basic cornerstone elements that if you have all of them, it's like a way more powerful success. After you exited the gym, where'd you go?
I took a year off. I just kind of traveled. I did like really long road trip around the United States. I ended up going over to Asia for a little bit. I went up to Canada and just literally took a year, because it was kind of this weird point in time where I didn't really need to work at the moment, but I figured I might not have another opportunity to be kind of relatively young and be able to take a year and just kind of travel around. And so that's what I did. And it was pretty fun.
Where was the worst place?
I don't think there was a worst place. I think that it was pretty fun, because here's the thing. If when you travel, what you think is that everything is going to go perfectly, you're going to end up being constantly disappointed along the way. And if you start out with the idea that part of the journey is things not going well, and that's part of what will make it fun, there doesn't end up being like a bad place along the way. Like, I think I ended up getting on like a really long gap between 2 flights where I was in like the Hong Kong airport for like 24 hours. And I actually thought it was pretty cool. Like, I mean, I don't think most people would have enjoyed it, but I thought it was pretty interesting. I'd never been there, and probably not the most culturally like experience of China that I could have, or Hong Kong, but I liked it. So, I mean, I think you know that along the way. I mean, there are places that I went where, staying at hostels, you'd get what you would expect with the ups and downs, and there's fun stuff and there's kind of stuff that goes weird, but it's just what you'd expect throughout the journey. So I didn't have like a really bad place.
It reminds me of the flat tire example. It's there's a bunch of different ways you can have a flat tire. You can have a flat tire where you weren't supposed to and everything goes wrong, and you're very upset about the situation because you were supposed to be somewhere else, and the group's already there and everything's going wrong. And then you can have the flat tire where the group is stopped with you and you're annoyed, but who cares? Now we're going to hang out and change a tire. And you're taking your shirt off and showing off to the girls in the group while you're removing the tire. And like you can paint a completely separate picture of this same experience. And it's funny when I think about it, because it's like you could say, it's like what defines whether it's going wrong or not, and you start to come up with the example of like, okay, so it's like it's because you're wearing a tuxedo, right? So you're going to a hypothetical really nice event, and you get a flat tire. That's really bad, right? But as soon as you come up with that idea, your mind pops up with a scenario where it could be hilarious that you get a flat tire and with a tuxedo. So it's like so contextual whether or not something good or bad is happening.
Yeah, one of my favorite kind of parables is this story where you have a guy and he goes out and he buys this really exotic, expensive horse, and this is years and years ago. So a horse is like during the time when that would be your net worth was your cattle. So he buys like a very fancy Arabian horse, and neighbors say, "You're so lucky that you're able to buy this horse." And he says, "Maybe, it's hard to say." And a week later, the horse runs away, and the neighbor says, "Oh, this is terrible! Like your beautiful horse ran away." And he says, "Maybe." And then the horse comes back with like 10 other horses that are all really fancy horses, and the neighbor says, "Oh my God, you're so lucky." The guy says, "Maybe." And then his son is trying to tame one of the horses and falls off and breaks his leg, and the neighbor says, "This is such a terrible thing that happened to you." And the guy says, "Maybe." And then the army comes to recruit all the young men to go to war, and his son stays home and doesn't go into a terrible battle that he would have lost. And the parable of the story is it's really hard to say whether something's good or bad because all you can see is that snapshot and you don't know what's in the future. So I kind of think of things like that along the way. I mean, and your perspective is everything. You can be happy with any situation for the most part, or you can be unhappy with almost any situation for the most part. And that with 90% of the things that happen, it's up to you to make the decision.
I agree. So you traveled, and then from there, you decided to build something new. So what'd you do?
No, I actually got recruited by a venture capital firm to help turn around a small oil and technology company down in Houston, Texas. So I did about a year with them. I was their VP of marketing, and I was good friends with the venture capitalist who came in and ended up being like the CEO, and he and I worked really well together on that project, which, the goal was to get it off the books of the venture capitalist, and I did successfully do that. And I was in Houston, Texas, and while I was there, I ended up meeting my most recent co-founder. I was doing some consulting work with him, and I ended up moving to New York City to create a co-working space. And I moved there in May of 2016. And the idea was to build like a really premium version of WeWork. And, moved to New York with like a suitcase and got an Airbnb. Literally, I think I had like 6 shirts and 2 pairs of pants, and needed to raise about $5 million off of the pitch deck. And we got really lucky, and we were able to raise the $5 million. I think we ended up raising about $7 million, and ended up building a really cool business. It was a ton of fun. We were really successful by like almost any measure. We built a space. It was named most beautiful office spaces by like a prestigious company. We were named top startups in New York City by like Inc. magazine. We were doing like really good profit margins. And I was really, really proud and really loved that business. And then like we were raising around a capital that was probably going to put us at like $60 million. So I was like, oh, I'm like CEO of a $60 million company. Like this is pretty exciting. And then WeWork crashed. And so we had to like pull the round of capital back. And then we were raising another round of capital because we were expanding into our second location and, you know, doing our official Series A. And then COVID hits, and like, I don't know, like 2 or 3 months, I went from being CEO of like a successful business to like that business was bankrupt. And that's what happened. It was really challenging. And I think it also gives you a lot of perspective to think about what matters to you, think about what's really important. And I was like incredibly lucky where during that time I had just met this girl, and her and I got along really well, and we ended up getting really close. She's now my fiance. You know, I'm going to marry her. But if all those things hadn't happened, kind of like the guy with the horse, I don't know if I would have been able to get to know her in the way that I did, and I feel super lucky for that. So it was definitely a bummer to lose the business, but my investors were all very happy with the work we did, and they realized that it was something outside of our control, and they had said that, you know, they were very happy with the work that we had produced, and my co-founder and I, they were very happy with both of us. So that felt good. I don't think there's anything I could have done additionally. It was kind of a black swan event, and I'm not one to shy away from accountability, but this was something that, you know, New York City ended up being the epicenter of COVID when it first hit, and commercial office spaces probably got hit harder than almost any other industry, unless we ran like a cruise line or a hotel. I mean, it just ended up being on the wrong side of the equation. And yeah, I was very proud of what we did. I learned a ton. Still good friends with my previous business partners, still good friends with a lot of the investors. Great experience, great people. I had a lot of really good learning from that. I wish that we had returned a positive ROI for the investors. I wish that, you know, returned positive ROI for myself, but I really enjoyed the experience.
That's, first of all, amazing. It happened over a good deal of time. And where you're at now, it sounds like you've sorted through it. What was the sorting process like? So, like, I mean, I doubt that you were, like you said, it was a hard time, right? I doubt you were thrilled when this initially went down. So I want to know, like, how did you view the experience? Did you view it as an external thing? Did you view it as an internal problem? I mean, it was very obviously, like, looking at it in hindsight, it's very obviously an external circumstance. But, you know, when something goes wrong, we tend to come up with all sorts of reasons why, and all sorts of like emotional issues about like what's happening, right? So what did you struggle with, and what seemed pretty easy?
Well, I think one thing that really helped me, and I don't play poker professionally, and it was, you know, during the boom back in maybe like 2004. It was like, I don't remember the exact timeline, but it was like when Chris Moneymaker won the World Series of Poker. When you're playing poker, you learn that you can be playing at a very high stake, that's very emotional, that means a lot for you. Everything can be perfect, and one card can come. And the second that card comes, when your hand goes from being the best hand to the second best, anything that you do from there is only going to cost you money. And no matter what you had done prior to that, the best thing you can do is lay down the hand. And I was really, really lucky that my co-founder was kind of the same mindset. It was actually, I give him a ton of credit here, where he was like, look, let's close this down quickly. You know, there's a saying, if you're going to eat shit, don't nibble, right? And we returned the investors a small amount of money. You know, we were very honest. We were very high integrity. You know, I said to the investors that I don't believe that, and some of the investors were very gracious and offered to put more capital in. And I said, I don't know that this industry will recover. We could spend 2 years, we could do everything we could, and it might not turn out perfectly. But I think that we did everything that we could. And if you do your best and it doesn't work out, it could be a bummer, but at the same time, like, you just move forward, right? Like, not to say that I discount losing investor money. That always bothers me. Not to say that I discount working really hard for 4 or 5 years on something that I really loved, because it's a bummer. But then you move forward. Like, you did what you could. You left it all on the line. You did your absolute best. Not much more to do. And so you move forward. Sure, hard days, absolutely. But I think there's a lot of people that go through much more challenging things in their life, and they make it through. And so for me, like, it just wasn't going to benefit me to dwell. And so move forward.
Yeah. I ask you the question because I think you're a badass. So,
oh, thanks. That's generous.
Yeah, and it's like, you know, with the things that I'm experiencing right now, it's like the thoughts of failure come up more consistently, right? Because I have more stakes from what I used to have. There's new things that I'm experiencing, new things that, you know, I don't want to lose, and I think about this a lot, and like I think about like the idea of bankruptcy, and I think there's a big split between there's people that view it as this like impossible bad thing that has happened, and then there's another group that are like, it's a logistical thing that like that didn't work out. And to me, the second one seems far more practical. So I want to know more about that mentality, because I think it's critical to success, actually. I think it's critical to moving forwards. Because most of the places where I have failed have been when failure wasn't an option in my mind. That was actually most of the places that I've failed. Most of the places where I've succeeded has been when failure has been an option. And yeah, in the Olympic race, there's a time when that doesn't work. But in almost anything iterative, you know, failure is testing data, right? Testing is failure is information. So, like, how do you get there? How do you get to a point where you view it as, okay, this is just a logistical thing that is unsurmountable in this particular circumstance? It's not me. It's just a thing to move on from.
Well, I think that you have to separate two things. If you failed because of something that was in your control, then you should be upset. That's very realistic, and you should have an honest evaluation. To me, it's unacceptable to fail. Not unacceptable, I mean, it happens, right? But it's very bad, and you should be disappointed in yourself if you fail because you could have tried harder, or you were lazy, or if you made a really bad decision. People make bad decisions, I mean, and that happens. But then you should be really looking at, like, what can you learn from it? And that, to me, probably would have more thoughts of regret or something like that. But I just think that, like, to me, I go to sleep at night, like, very comfortably, where I'm going to do my best. From a Monte Carlo game theory standpoint, when you start a business, the odds are stacked against you, right? And if you can realize that, you know, this is probably, you know, it's an early stage venture, right? So statistically, you're like, I did the math. I think like the chances of me raising $5 million was something like 1 in 10,000, or like 1 in 100 companies at the time. It raises funds, and then 1 in 100 of those companies raises like 5 million, right? I think that like and this was 2016, so 5 million was a lot back then. But I think that you realize that, like, you're doing something that has an asymmetrical upside. If it goes well, you're going to really knock it out of the park, and it's not going to go well every time. You do your best, and then you let the chips fall where they may. Because to be honest, like, sitting around worrying, like, oh, like, I'm mad that it didn't go my way. Well, stuff happens. And so I just think you have to be enjoying the journey and not be super tied to the outcome. Because when you're really tied to the outcome, if I had gone into this business and said, I'm going to make $50 million, when I didn't make $50 million, let's say, like, you know, these past 4 or 5 years, it was all for nothing. That's not how I feel. Like I loved the process. Like I really enjoyed working with the people. I really enjoyed building something. I really thought it was like a cool experience. And so, I think that every entrepreneur should be focused on the journey because you never know where the outcome is going to end up. And I think if you're really enjoying the process, you'll end up much more likely to have financial success, but agnostic of that, you will be able to kind of sleep well at night. And I also think that you should operate with very high level of integrity, be very open about the good and the bad about your organization, provide a product that people want. If you have investors, be very open with the dialogue of what's going well and what's not. Don't surprise people with bad news. And I think if you do all those things and you operate the best that you can, you got nothing to be worried about at all. That doesn't mean that the best you can do today is going to be the best you can do tomorrow. Like you said, it's an iterative process, but I think, that's kind of what I think.
That's awesome. It makes me think of I think it was the writer Neil Gaiman tells a story about he was at a book signing and he'd been signing books for hours, and he realized oh man, I'm miserable. I'm miserable having people constantly walk up to me, praising me. And that's not tenable. That's not a good idea. It goes back to the context idea. He was talking about how so many artists and musicians don't enjoy the journey. It's like you get to an arena show, and then once you're there, you're like, okay, well, I haven't solved this musician problem yet. What about the next arena? And I mean, what you're describing sounds like a little bit more like living than a sort of binary situation of okay, I've succeeded or I've failed.
Well, I mean, you have to define success, right? If your definition of success is X number of dollars in the bank, 100,000, a million, 100 million, 100 billion, whatever the number is, if that's success to you, I think when you get there, you'll probably find it's not very fulfilling. Yeah. Kind of like what you talked about with the person signing the books. If your definition of success is enjoying the day-to-day, spending the time that you have with the people that you enjoy, doing something that you're proud of, earning enough money to support your lifestyle, I tend to think that you'll be much happier. And I've met people that are worth hundreds of millions of dollars that aren't happy individuals. I've met people that make $50,000 a year that are wildly happy and have great family and great friends and So I haven't seen an enormous direct correlation between financial success and happiness. And at the same time, I can say that financial success is a huge sliding scale. It depends on who your social group is, where you live. If you live in the Midwest and you make $80,000 a year, and all of your friends make $50,000 a year, you might be incredibly happy with where you're at financially. If you lived in San Francisco and you made $500,000 a year, but all of your friends made $2 million or more, it sounds weird, but you might not be very happy with where you're at financially because money doesn't go that far in San Francisco, and $500,000 a year might be just barely enough to buy a one-bedroom condo. And if you have a family, you might be struggling with that. So I don't think that success can be boilerplated into a financial number. I think that it's much more about the people, the experiences that you have.
Yeah, it's the context. It goes back to the social media dilemma of everybody was different, but now we know it, and it bothers us. I want to step back to the building of that company and just ask, what creates value? Because valuation to me is an amazing thing. It's the how you can put a price on something in general to me is fascinating. So I'm just going to start with that. What creates value?
Well, I think value is derived differently for different businesses. One way to do value is you could do a discounted cash flow formula. That's one thing you could do. Another way to do value is you could look at future growth. That's another way to do it. Another way to do value is you can look at a multiple of revenue or a multiple of EBITDA. These are all things that create value. For my business, we realized that if you can get to a certain critical mass of doing, like 10 million plus a year in revenue, that there is a network effect that coincides with that where the value gets much, much bigger. So running a singular co-working space, which is where we were, which is like kind of what we started out doing, you might make a couple million a year in revenue or something, and then you might make a couple $100,000 in profit. And that, if you just had that and you were never going to grow, you're a small business at that point. So the value of your company would be based on, some level of profitability, and you could source that out. But growth and velocity and the trajectory is kind of how you look at value, at least in a startup. Like, how quickly can you grow? And when you reach critical mass, not just my company, but like any company out there, when you reach critical mass, the whole becomes greater than the sum of its parts, right? Like, the biggest startup right now is probably Clubhouse, where like I think they have a $4 billion valuation, and I'm not really sure if they have any revenue at this point, right? But they have a huge network effect. So that creates value, and people underestimate the value of network effects, like Dogecoin.
That was going to be my next question. Okay, you've been a writer on Wall Street Bets. What creates value in Dogecoin?
Yeah, it's network effect, right? So there's a lot of people are like, Dogecoin is trash because it started as a joke. It can never be serious. But you know what? There's a lot of things that are very valuable in this world that weren't started the same way that they are seen today. Like in the United States, a Barbie doll is fairly ubiquitous with previous versions of gender norms. Girls play with Barbies, boys play with trucks. We'll not get into the whole kind of issue of whether or not that's good or bad. I'm just talking about what was. And Barbie's ubiquitous, but Barbie started out as something between like a joke and a sex toy, depending on what version you look at, and Mattel turned that into a multi-billion-dollar industry, right? Viagra started out as a heart medication, right, and then it turned out that it just was good for men to have erections, right? So there are lots of different things out there that came from happenstance, mistakes, different versions of what they were, and then they evolve over time. Dogecoin fits a certain cultural psychopathology that's going on in the world today, right? Like, you can see that there is a desire for people to like say fuck you to the societal norms and go down a different path. You can see that like there was Brexit that came about, where when Brexit occurred, like it might not have been the most intellectually thoughtful thing to do, depending on who you ask. You can look at people going with a different direction and kind of counterculture. You had Brexit, you had Donald Trump that was elected. You have GameStop, which was objectively probably not the best company on a lot of people's books. And then, you have Dogecoin. And these things sound very kind of haphazard, like what do they have to do with one another? But I think they all have the commonality of people not wanting to go down the path that they've always gone down. People wanting to do something that is what they're not being told is correct, or not being told is the way it should be. And I think that there's power in that network effect. And I think that the Wall Street Bets things kind of showed that, right? Where you had GameStop be one of the best performing stocks in the past like 12 months.
Yeah,
there's reality to that.
Yeah. A culture gets in a scenario where there's not enough options that are useful. There's a pushback, and people, I think they'll go a lot of routes, and not all the options are good, but the thing that they're signaling, which is we need better options, I think is really legitimate. It's like, it's like somebody might not have gone and studied every cryptocurrency, but they see that they don't want to go the same route that they've gone before. And Doge is present, right? And also adorable. It's like there's a weird like reaching out, it seems like, in our culture right now, where people are just flying off in different directions because they might not be finding the right directions all the time, but their initial idea of we need a new direction, I think, is solid. Like their core premise is solid. And some of the directions that they go, just by the fact that they're going in that direction, might turn the direction into the right direction. That's a weird one.
Yeah, self-fulfilling prophecy.
Yeah. Yeah, I mean, a lot of people that talk about Bitcoin talk about it that way, where it's like, look, the higher it goes, the more valuable it is. Like, it's a good thing that the price goes up because it makes it more legitimate, right? And that's one of those, like, okay, the action, even if we were wrong in the first place, now we're right. It's a weird one.
Yeah, it's a new wave of finance, right? And it's different. Where in the past you had a really strong pull to the value of a company being tied to its financials, right? And these new cryptocurrencies, they are not tied to financials; they're tied to network effects, social sentiment, cultural psychopathology. That's where their value is. Now there's also technology where some of these cryptocurrencies can do things that are like insane, like 0 to 1, 10x better than what goes on in TradFi, like traditional finance versus like DeFi, like decentralized finance. I mean, some of the stuff is really insane. So I mean, there's like really, really good value in Bitcoin being like one of the best assets over the past like 12 years, right? It's got a 200% compounding IRR, so as a store of value, it makes it one of the best store of values that there is. But also, if you contrast it with gold, gold is really challenging to store, and it's really challenging to move when you get into larger amounts of gold. Like, there are a few problems with gold where like it's hard to divide it up. Like you couldn't shave off a piece of gold and buy a car with that piece of gold. But Bitcoin's probably like 10x better than gold. It's very, in the respect that like if you wanted to transport $1 million in Bitcoin from the United States to Russia, you could do that with a single transaction fee, probably less than $50, under 20 minutes, and secure transfer with no question of counterparty risk. It's real Bitcoin. If you wanted to do the same thing with gold and $1 million, it would probably cost you at least $10,000 minimum with security and testing and counterparty risk, and is somebody going to steal it? And once you get the gold there, how are you going to exchange it back into fiat currency or like local currency? And is the gold that you're bringing real gold? Is it 99% pure? Is it 92%? I mean, like, so there's a lot of counterparty risk that is there with gold. So from a technology standpoint, it has value in that sense, and then it has network effect, which I think is the bigger value, because I think that's what's really interesting. And then it also has value of, an absolute level of scarcity that goes with it as well, which I think also is interesting.
I think Bitcoin is exciting. I think it's fascinating, and I love the comparison with gold. I love the sort of just absolute flattening of the arguments against Bitcoin's speed by saying, hey, we aren't comparing crypto to other crypto. We're comparing Bitcoin to gold. It's not about, block times between different cryptocurrencies. It's not about how fast, money can settle between different currencies. It's about how fast money can settle between Bitcoin versus gold, which is, thousands of times faster. And then also the arguments around settling cash, where there's so many arguments of well, my Visa is faster than Bitcoin. It's like, no, it's not. It just appears faster. The dollars still take 3 days to settle. We've just created a layer on top that makes it appear to settle faster, because we're just saying, okay, well, I guess you got the money now, or yes, you've spent the money now. But Bitcoin and actuality are faster than both of those things. And I think for another cryptocurrency to have the same use case as Bitcoin, it would have to be as much better than Bitcoin. Then Bitcoin is better than gold. I think that argument makes a ton of sense.
Yeah, and the thing that I always think about is these things aren't competitive. They're much more collaborative. It would be like me saying, hey, Josh, do you think that certificate of deposit, CDs, are going to compete with credit cards? And it's like, well, no, they're like really different use cases. Like, they don't really live in the same universe, right? And Bitcoin does a really great job of being a store of value and a way to make large transactions. It's not to buy coffee. It doesn't make sense as a currency. It's almost no more a currency than it is a coin until you would get like a layer 2 protocol with like Lightning and some implementation. And I don't think it's really worth going down that rabbit hole of how that works. So you assume Bitcoin is like gold, right? And then you would assume Ethereum and some of these other cryptocurrencies are actually going to function, whether it's like XRP or Harmony One or Ethereum or like layer 2 or whatever. Those are going to have the ability to do daily small transactions in inexpensive manners that could usurp traditional banking and finance. But as you said before, for small transactions like using your Visa or your Amex, it doesn't really matter to the consumer, right? Like to the end user, their experience is identical. What becomes really interesting in the DeFi space is you start to look at the leverage that can be put on these cryptocurrencies without counterparty risk because you have instant settlement, right? So for the viewers and the listeners that might be listening to this, in traditional finance, you have like a T+2, which basically means that, and I could be saying this slightly incorrect, so it may not be perfect, but it takes like 2 days to have a finality of settlement, which is a big reason why Robinhood shut down some of the trading with GameStop, because when you start to get into a lot of leverage, things can get out of whack when it takes 2 days to fully be finalized. With cryptocurrencies...
And let's actually, real quick, break down a little bit more. What is settlement? What does it mean to settle money?
Well, it's finality, right? With cash, there's finality. If you gave me a $100 bill the second it hits my hand and I, theoretically put it in my pocket, it's settled. Settlement with other banking institutions, I believe an easy way to give an example would be the level of counterparty risk goes to zero. I think there's, they have finality in that they know the transaction has been complete and that it can't be reversed or withdrawn without both parties' consent. So that's my understanding of finality and settlement, although I'm open to that being slightly imperfect.
Sounds good to me.
I don't have,
Yeah. It's beaten that speed. It's beaten most of the relevant speeds in terms of like logistics. It's just the appearance, and I think I'm thinking back to like most of the inventions that have occurred, and whenever we look at something like if we ask our customer base, what do you want? The answer is always, I want the full package, right? But if you look backwards at the inventions, it's almost always one small tweak. I really enjoyed. I read a bunch of books about the importance of steam power in the Industrial Revolution, and it's really fascinating stuff. And none of it was possible until all of the rails were the same size. Like we really couldn't get going on a lot of our innovations until the width of the rails on the railroads were consistent. Once we could do that, then we could transport things much farther distances, much faster, much more efficiently, but more importantly, we could innovate trains. So we managed to get the rails consistent, and then one annoyed engineer on one locomotive somewhere in the Midwest got sufficiently annoyed at some aspect of what he was doing that he said, okay, well, I'm going to make this one small tweak. and that'll make that better. And then that one small tweak, it's like, they had those hooks on the trains as they would go by stations that it would enable them to grab stuff. It's like they got tired of stopping at every single place. So they would have a little hook that would allow them to grab things that were, have a package that was hanging there. It's like, it was just, one engineer somewhere was like, okay, finally, that's done with. We've solved that annoyance. And when we look at it now, we see the locomotive in its entirety, when in reality, each little piece was an individual innovation by one person that wanted to make something better. And I think that when people look at the crypto space and they look at the available cryptocurrencies, they analyze it according to that sort of full package analysis where, well, does it do this? Does it do this? Does it do this? Does it do this? But the reality is, we want something that does one or two things better that makes all of existence better in some way. And I think that Bitcoin is an application of that principle, where it doesn't do everything. It does a couple things well.
Yeah, I agree with that. I think it's very easy for people to understand the parallels that are drawn between things that exist in the physical world versus things that exist in the digital world. It's like easier to quantify what's going on in the physical world. So what you're talking about with steam engines and making the width standardized, that's very common. When you look at it, it's not just there, right? Like automobiles actually weren't really great compared to a horse until there were paved roads. I mean, they were maybe a little bit better, but kind of a novelty where, like, if you had to go over rocks with the wheels that they weren't that great. But by lining the infrastructure with paved roads, automobiles usurped horses, and now there are no more horses for main transportation. Same thing's kind of true with the internet, right? Like, when the internet first came out, it was pretty clunky going over the phone lines, and like, it didn't really work that well. It was good, but like, if you remember, like the dial-up, you couldn't pick up the phone, and it was kind of clunky and a little bit broken in the inception. I mean, the earlier you were, like, the more broken it was, right? So what made the internet get better was the right infrastructure in place, and being able to have like really fast internet makes a huge difference. It makes this call possible, right? Like, this would never have been possible over dial-up. And so I think the same with cryptocurrencies, right? Like, we're in the very early stages of laying out infrastructure for these things, and so they're imperfect. But any disruptive change requires both infrastructure and technology. Like, even Tesla, kind of the same thing, right? Like, Tesla cars wouldn't really be very good without a supercharger network that allows you to rapidly charge them to go throughout the United States. It's all the same stuff. And I think the more infrastructure that gets put in place, the better these things will be able to function.
So you're an investor. You're doing a lot of investing these days.
I do some, yeah.
There's to me, like, a problem with decision making. You can't make a decision without any information, and you can't like wait until you have all the information to make a decision, because that's impossible. You'd wait forever. So where's the point?
I think in your head you think in bet size. That's what makes sense to me. Like, what is the percentage likelihood that I'm correct? If I'm correct, what is the expected ROI? And then you do like kind of a Monte Carlo simulation. And if I did this thing 100 times, how does that work out? Like, I'm just going to like say this like hypothetically, right? Like, let's pretend Bitcoin has a 50% chance of going to zero and a 50% chance to go to $1 million over the next 10 years. And this isn't what I think, but you could say like, all right, you're going to get 20 to 1 odds on your money. And if you assume there's a 50-50 shot that either one occurs, like, really oversimplifying this in game theory, which isn't, the best thing, you can say your net expected value is a 10x multiple. All right, if that's what you believe, and a lot of people say there's 0% chance it goes to zero, and everyone's got a different perspective. But if you think your net expected value is positive on something, then I think it's a reasonable investment. And I got like a few certificates in like advanced game theory from Stanford when like COVID hit because I had a lot of free time, and that kind of helped me round out my thought process. Like I just think if you can think in bet sizes and look for things that have an asymmetrical upside, but also not place bets so big that you can't weather the storm. Because sure, if going with my scenario, if Bitcoin is a 50-50, go to zero or be at $1 million in 10 years, one of the keys to that is that you have to be able to stay in it for those 10 years. So the investment starts to make a lot less sense if you're like, okay, I'm going to pull out if there's a 35% market retraction. Because then in that scenario, your game theory actually gets far skewed, where you might be exiting your position like 85% of the time. And at that point, you're going to be exiting your position 85% of the time at a loss, and the game theory may not make as much sense, right? And it's really easy to say these things on paper, and it's a lot harder to do them in action, right? So that's why I say thinking in bet sizes. If you put 50 basis points of your net worth, 0.5% in Bitcoin, and you're like, okay, I'll just let it ride no matter what it does, you might end up with a better outcome than if you put like 80% of your net worth into it, and when it takes a 50% drop, you exit. And I think that's almost the same with any investment, where like one of your biggest advantages as an investor is time and patience and not looking at something every day. I think, if you're going to look at Bitcoin and say it went up to 64, now it's down at 47, and then it's back to 55, I just think you're going to get rattled. You either have conviction or something, or you don't. You lay out a game theory that you're comfortable with before it occurs. If you want to put a stop loss in and say like you're going to bail at a 35% loss, okay, that's totally fine. But that's kind of where how I think about investing. It doesn't mean it's the best way to invest. It's just how I think about things.
What are you interested in doing in the future?
I like being around people I like running businesses. I like doing investing. I like, I've been doing a lot of kind of podcast type stuff. I've got my own channel. I like the idea of doing that. The thing I probably enjoy the most is being around people that are much smarter and more knowledgeable than I am. That's not a really high bar to hit. Like, there's a lot of people out there way smarter than me. I really enjoy that. Like, I enjoy learning from people. And so, that's probably what I enjoy the most, is building things and learning. And whether that's building like an investment thesis, whether it's building a company, whether that's just building something that I enjoy that has no economic benefit to me whatsoever. That's what I like to do. And I like to be around people that are smart and energetic and fun.
Love it. Where can people find you online? Where would you like to send to everybody?
Josh Bobrowski on almost any channel. It's my name. It's really easy to find me. I'm on YouTube, I'm on TikTok, I'm on LinkedIn. Not really very active on Instagram, but just look up my name. I'm all over there.
Awesome. Well, thank you very much for coming on. I really enjoyed this.
Josh, thank you for having me. This has been a pleasure.